So in this strategy, what you want to do, you want to look for something like this. All right, let me just show you let me show you an illustration here. Let's do this. Right, this is the current day's candle. Right, let me just put the wicks on top just to make it look more realistic, guys, because I want to show you this in the most realistic way that you guys may be able to see, yeah, and understand. So this is the current candle. So what you want to do is you want to wait for this candle to open. Okay, wait for it to pull back above the close of the previous day. This is the close of the previous day. All right, this is the close of the previous day, as you can see. Let me just write here close. Okay, so this is the close of the previous day. All right, this is a bearish candle and this is its close, right? Yeah, that black line is its close. So what you want to do is you want to look at the close of this candle. So you wait for this current daily candle to pull back above this close. You can see that there is this wick which pulled up above the close. All right, like here it pulled back up. So when this candle opens, assume when it opens, let's just see if it went to open like this, just make it smaller. Like here it is still a tiny candle, right? It has created maybe a small wick like this, right? So this is the current daily candle. What you want to do is you want to trade above the close of the previous day's close. All right, on the 1 hour time frame, let's see, to look something like this. Okay, this is a bearish candle to produce another bullish candle here, and then another bullish candle right here. Okay, then maybe it will create a small bearish candle here. All right, let me show you this. Okay, and then it will produce maybe a big bearish candle which engulfs a bearish engulfing candle right here. Okay, we may have something like this, right? You want to wait for your entries to appear when this structure is above the previous day's close, which is let's say like here, right? So that is the close, right? So you want to look for entries above, okay, like here. So this strategy would allow you to enter maybe after there is a bearish engulfing or there is an evening star formation. Yeah, put your stop loss above previous structure, then target like a 1 to 2, 1 to 3, whatever you want, guys. All right, so this is the formation of the strategy, right? Let's adjust this candle, it's a bit bigger. All right, so let's just adjust this a bit more just to allow you to understand the strategy better. So this is the bearish engulfing. So your entry can be at the close of that candle and your stop loss can be above the structure. This is the illustration I wanted to show you, the strategy that you have to use. Remember that this candle creates the structure on the lower time frames. It has internal structure on lower time frames, as you can see here. So we're going to be looking for entries on the lower time frames. So let's go now onto the charts and then I can show you this on a real chart. All right, yeah. So here on the chart we are going to look at it in more detail. Okay, let's use this example with the current situation on USD JPY. As you can see here, we're on USD JPY. This is the previous candle right here. So we're going to mark previous day's high and we're going to mark the previous day's low right here. This is how we're going to perform the markings. And then let's also change the colors to red and green for the support or the low. All right, so we are also going to draw the close. We can make it black. We can make this black or blue. Let's make it black, right? So that is the close of the previous day's candle. So this is what we are going to be looking at to trade on the lower time frame, guys. So guys, this strategy is very powerful and it is going to transform the way you're going to be looking at the markets. Remember, as you are taking in this knowledge, please leave a like on the video if you're getting value, subscribe and also comment down below. Really, I appreciate what you guys do. Thank you, guys. All right, so we are looking at this structure. So what you want to do is you want to wait for the current candle to close or to produce a wick below that close. So that we are going to be trading this wick here. We are going to mark that wick so that when we go on the lower time frames, we can see that area. Let's make it purple, right? Okay, so after that, we're going to go now to the lower time frames. We'll go to the 1 hour chart or even the 30 minutes chart. Let's use the 30 minutes chart for now, okay, so that you can know that it can work on any time frame. All right, so here on the 30 minutes chart, you're seeing the area here, okay, with the same drawings. The purple area here now is where we're going to be looking at to get our entries. All right, so if you've ever seen this kind of strategy anywhere shown to you guys for free, let me know in the comment section down below, guys. Let me know in the comment section. This strategy is really powerful. I know you guys are going to benefit from this. What you're going to do now on the lower time frames, you're looking for the price to break below this black line here, okay, which is the previous day's close. Once price breaks below that, you're looking for a good candlestick formation for it to go long, okay. Remember, we are only looking for long trades in this setup. You can have multiple entries here. You can get stopped out, but you can also re-enter because there are multiple entries. Let's also look at the 1 hour chart because that is the one we used to illustrate in the beginning. Let's look at an entry on the lower time frame, which is the 1 hour chart. When price came down below this and retested the previous day's close, okay, yeah, so what we are going to be looking for is candlestick formations around here, okay. We are looking for candlestick formations that can give us a good entry confirmation or a confluence to go bullish, right? And what candlestick formations are we looking at? We're looking at bullish engulfing candles. We're looking at 3 white soldiers. We're looking at W formations, many other candlesticks that you guys know already. Yeah, also we're looking for things like rejection wicks, multiple rejections around that area for us to go long. So here we had a bullish engulfing candle here, as you can see, but this bullish engulfing gave us a good entry, yeah, and you could put your stop loss at previous structure low, okay. Don't put it at the close of the or below the close of that candle. Put it below this other structure here. All right, put it here, then put your target at a 1 to 2, 1 to 3, or target previous highs. All right, as you trade, right, you can do this, guys. If you put your stop loss just below that candle here, this one here, which is a very tight stop loss, you would be stopped out. As you can see, guys, you would be stopped out here, but you would not be entirely wrong because you'd get another opportunity to enter in the next 3 white soldiers here after that bearish candle here. You had 1 to 3 bullish candles right here, which are 3 white soldiers. You can see, let me zoom in here. 1, 2, 3 bullish candles. You could enter on the third candle, which is the third white soldier, and then you'd put your stop loss below this, like here, right? And then you could target the previous high, like here, okay, 1 to 2, 1 to 3, or previous high, right? This strategy would really make you profitable. I see many people struggling with smart money concepts, ICT, and all that, but believe me, this strategy will help you become a much better trader than looking for many things that are complicated. You can also go back and look at maybe lower time frames. Yeah, like maybe we'll look at a 5-minute chart. Let's look at a 5-minute chart and see if we can get a better risk to reward ratio. Okay, when price breaks below this black line, you're looking for candlestick formations around that purple area here to support a bullish move. You can also be looking for a break of market structure in the lower time frames. For example, we have here a high, a low, a high here, a low here, or yeah, slight low, a high, a low, a high, a low. Okay, you're looking for a break of a bullish structure, or you're looking for a breakout of a bullish structure for it to go long. Okay, so here there is a high. Okay, you're looking for a breakout above the highs, like that high breaks above that high, but it is above the black line, which is the daily close. So you wait for it to come down to create a low, creates a high, okay, creates a low here, creates a high, creates a low. You're looking for price to break above any high below the black line, then you can look for entries. So here it creates a low here, it creates also a high here, creates a low here. All right, so this high here then breaks this high. All right, so this high breaks this high. So you're looking for price to pull back. Don't enter the high, wait for it to pull back here, then you look for your entries. So let me zoom in so that you can see that area clearly. All right, so at this area, at this low here, you can see you get 1, 2, 3 white soldiers. Okay, so you can take your trade at the third white soldier, and then you can put your stop loss at previous structure lows. All right, like here, this one here. All right, so you can put your stop loss right here. All right, then you can target previous highs, 1 to 2, 1 to 3 risk to reward. But on a 5-minute chart, you can actually target a very high risk to reward ratio, which is the previous day's high, which is that red line. So you can target, look at that risk to reward ratio, guys. That is a 1 to 10 risk to reward ratio trade. You can pass your prop firm challenge in just one single trade. Guys, just using this. So that's the strategy, guys, I wanted to show you. Hope you guys take value from it. If you take value, leave a like, a comment, and also subscribe if you're not subscribed. This strategy is worth thousands, guys. It's worth thousands, but I'm giving it to you guys for free because I want you guys to all eat. Thank you, guys.